as I just grab my mouse pad so my mouse clicking and shuffling isn't too loud. You're probably thinking, where is this guy? What is he doing? Why has he got John on the screen? Well, I'm here in the Rask podcast studio. So you may remember from last week, for those of you that have been playing along, you may remember that we had some technical difficulties last week where the internet cut in, cut out, cut in, cut out again. Well, this week I thought, to heck with that, we're going to go straight into the studio, which is where I do 90% of my recordings now in Melbourne. And it's a bit, the ambience just isn't there. Maybe we could have done a virtual screen behind me instead of this foam that you see. But I'm pleased you're with me tonight. And sorry we're a couple of minutes late. Tonight we're doing a blitz. Rob and I are here joining you tonight for Selfwealth Live, and we're doing a blitz on results. Of course, we're going to do our giveaway as usual, but we're also going to cover, I hope, 10 companies. I think last week was a Selfwealth Live record. We went for, someone correct me, an hour and a half, an hour and 40 minutes. So tonight we're not going to do that. We're going to move quickly, and we're going to move through some companies that you've asked me to cover. One of those companies is Pilbara Minerals. And hopefully going to answer some questions, and we'll get some feedback from you guys as well throughout the show. We'll do our giveaway in just a moment. So be prepared. Get your top 10 or top 5, I should say, buys and top 5 sells ready to rumble, because we'll quickly skip through them tonight. Just as a bit of housekeeping, as always, you will remember that you can find us using the hashtag SelfwealthLive on Twitter, on Instagram, wherever you get your social media. Please be aware there is a fake Rask account out there, and it is definitely not us messaging you about trading strategies or crypto. You can find it _Selfwealth on Twitter. And if you have account-related questions, please take them over to selfwealth.com.au. In the bottom corner there, you'll see instant support during office hours, and the team will help you out. Rob and I are here tonight to answer some investing questions, but what that means is, if we do answer the questions, it's strictly limited to general financial information only. Because we don't know your personal circumstances, your needs, goals, objectives, we cannot offer you personal financial advice. So please remember that, and be sure to check out the financial services guides. I can see that everyone's already saying g'day. Raptor, Matthew, Stevie, hello. Patrick, you said Owen is going to officiate my wedding so it becomes a long-term investment. Well, you're starting pretty well. You started with pretty well, Patrick. I'd probably give that a 7.5 out of 10. That is fantastic. Good to see everyone in the chat tonight. Like I said, we're going to move through some companies. I'm going to add some in that weren't in the EDM or weren't in the title, or aren't in the title of tonight's live session, because I know many of you will want them covered. There is one company right at the end, which is NetWealth. I haven't fully digested the results yet, so keep that in mind when we come to that. I'll probably just dive into the reports like you will be at the same time. Okay, so I'm hoping Rob can drop the latest Big Swinging Stocks podcast episode into the chat for us. If you haven't already listened to that, please check it out. All about finance and communication. Really, really good stuff what Rob and Alex are doing over on Big Swinging Stocks in your podcast player. Check that out. Okay, Mwanza, good to see you. And he's already done it. He's already dropped in Big Swinging Stocks out today. EML giving me a headache, says Chasma. Hey, Areko Manix. I probably mispronounced all of those things, so I apologize. But EML is definitely giving me a headache. That'll be up shortly. I think I'm doing that one after Altium. So Jake, Domino's, and Pilbara had a top day today. Fantastic. Absolutely. Yes, they did. Luke, yes, EML should be fun given today's kick in the hole. Yeah, you know what. Okay, so let's get into it. Ladies and gents, please get ready to give me your top 10 buys and sell, top 5, I should say, buys, top 5 sells. If you get the number one guess correctly, we are only doing shares tonight, no ETFs, because if we did ETFs, Vanguard, VAS would have been number one. But as usual, so only companies, top 5, what were the most popular traded shares? If you guess the number one most bought and the number one most sold inside the Selfwealth community, you get access to the Value Investor Program. That's my online curriculum. Retails at $499 for a pass to that course. You get that, but you also get some Selfwealth trades thrown into the mix. You just have to email marketing at Selfwealth. As always, I'm going to start with my joke, and it wasn't about John Howard. here is my joke. It's on the screen in front of you. Out of 10, what do you give me? Why are nudists bad for the stock market? The answer, they are associated with bear markets. That is tonight's joke. I did scrape the bottom of the barrel, it's fair to say. So that's my joke for tonight. I can see a few of you have already got your guesses in, which is fantastic. While you're there, give us a score out of 10 for the joke. I think it's pretty good. I feel like I'm going to need to lean on you guys next time for some of these jokes because I'm running out. The internet is running thin on investment jokes. I've got to say, having done this for 40 or 50 sessions, who knows how many we've done now. I am stretching it, and I think I've already reused one. 3 out of 10 says Rob. No, 6 out of 10 says Martin, and Vinay says 10 out of 10. I think, Vinay, you've given me the score just because I've used some sort of imagery with this one tonight. So, all right, guys, let's get. Oh, Rob's volunteered for next week. That's fantastic. I will take that. I can do next week's joke. Owen, just remind me. I'm going to give it to you, Rob. Next week, you're going to come out and you're going to give us the best investing joke you can think of. And Stevie said that joke should have been saved for September. I like it, adding onto it. Okay, top 5 most bought, top 5 most sold. Let's get into it so we can get to some companies and I can give you a brief on some of the results that we've seen so far. So I've got my notes here on my phone. I'm just going to get that up because otherwise I'd make a mistake and I oftentimes just end up showing you the top 5 most sold and top 5 most bought. So this time I've got them on my phone so I can't make the same mistake. Okay, so here we go. We're inside Selfwealth. We are in our low tofu virtual portfolio, which you can see on the left-hand side here. In at number 5, and I'm just going to put something in the chat to say, get your guesses in so we know when everyone's got their guesses in. Get your guesses in. And there we go. Let's start at it. At number 5 on the most bought list, we've got Zip. Zip, which has frequented the most sold list recently, is actually now in the most bought list. So maybe people are thinking, well, it's hit a bottom. I don't know about that. Why don't we wait till reporting season's over? That would be my stance on this. Wait till reporting season's over and see how those bad debts and the company's view to profitability is actually shaking out. They seem to be, quite. I guess they were quite optimistic in their last update. Stevie, you've asked a question. When you say most sold and most bought, is that for the week or the day? Stevie, great question. That is for the last week. So we record this on a Wednesday night, as you know, every Wednesday at 6 p.m. Eastern time. The actual numbers that we get are for last week. So it'll be like Monday to Friday, the preceding week. So we're trailing results. We've got trailing results, and just not on the day, because I think that's, if it was on the day, it would actually be really interesting because then we would be able to just find the biggest, most volatile share price movement and probably start with that. But it's the last week. So here we go. In at number 4, another name that is familiar to many of you is Core Lithium. CXO is the ticker code. I talked about in the past, like many lithium explorers and future production hopefuls, Core Lithium is one of the companies that just keeps getting brought up in this weekly top 5 list. In at number 3, we've got ANZ. Where is my, here it is, there's my cursor. So in at number 3, we've got ANZ. I don't know how many times ANZ's been in the list, but not that many. It just doesn't seem to be as popular amongst the self-wealth community. But we can see down the bottom here, it is 5th by ownership. Pardon me, which is quite strange that we don't see more of this company up in the top 5 most bought and sold. I guess it's not really a sexy lithium play or a technology stock or something like that. Of the people who are buying, 32% say it's undervalued. Undervalued, I'd buy it for maybe good dividend paying stock. That's what 21% of people are saying. That's probably why I would buy it. Probably not for growth. I struggle to see it for growth. Rebecca, you seem to like that Core Lithium has made the list. In at number 2, another fan favorite when it comes to lithium is LKE. Been a bit more volatile than Core Lithium recently, as you can see on the chart here. Remember that Core Lithium was actually in our top 10 performers on the stock market over the past 10 years, and that's because of that massive run-up. The same cannot be said for Lake Resources, given the volatility that we've had recently. We'll talk more about lithium tonight. Okay, in at number 1, and I'm going to be quick tonight because we've got so much to get through. Okay, Hooper, I see you say there, ANZ just had a rights issue. Well, that would make sense. That would make sense. Space Monkey Mojo, you've asked about Altium. That's the first company coming up in just a couple of minutes. Okay, number one, most bought. And I hope, Rob, you're keeping a track of this because we're getting a lot of guesses in tonight. Number one most bought is BHP, the big Australian. We've talked about this company. It is inside the virtual portfolio that we are creating, and we will get back to creating after reporting season is done. We can see, where is it? BHP is in the portfolio, and it's up just over 1% today, but it's down 19% overall. Keeping in mind, however, that it did do the separation with Woodside Group, where it sold its oil and gas assets. So we haven't adjusted for that here. Stevie, PHP, so obvious, and I missed it. Well, people are buying it for dividends, that's for sure. So, yeah, it's one of those ones where people just can't get enough. In it, okay, so we've got, just to recap there, we've got 5, 4, 3, 2, 1. We've got Zip, Core Lithium, ANZ, LKE, or Lake Resources, and BHP. Now let's go sold. Yeah, Jake, I'm not surprised either that BHP was in the list. To be honest, anytime one of these big blue chips like BHP pays a massive dividend like that, I'd be expecting it to feature in the top 5 most bought or sold, probably most bought. So here we go, in at number 5 on the most sold list. So Zip made the list for the most bought, but it's also 5th most sold in the community. Super volatile, unsurprising that it's down here. Interestingly, the ownership of Zip in the community, amongst the bottom 10% of performers, we can see it's owned there by 16.5% of those in the community, whereas in the top cohort of investors inside Selfwealth, using Selfwealth data, you can see it is not owned by many investors. So that's really, really interesting. Jake, got one so far. Come on. LKE for the biggest sell. Well, we'll find out in just a moment. In at number 4, BHP, surprisingly, is the 4th most sold company inside Selfwealth over the past week. I wouldn't be selling it ahead of a big fully franked dividend, but maybe people have got ideas that I don't. We did talk about how, commodity prices have been pretty proper for the big Australian. Maybe not so going forward. Maybe we see some more volatility. In at number 3, Pilbara Minerals is the 3rd most sold. Obviously not taking into account today's share price rise, which is 6%, and we'll get to why it may be up so high in just a moment. In at number 2, another lithium play, which is Core Lithium, also featured on our most bought list, amongst the most sold. For investors who sold it, let's find out what they're doing. 44% of the investors who are selling say they are taking profits. And Jake, you are going to like this. In at number 1, we've got LKE. So Lake Resources, the most sold, the 2nd most bought inside Selfwealth over the past week. We see this extreme volatility generally results in a lot of trading amongst investors or amongst traders, depending on how you frame that. So unsurprisingly, LKE in at number 1 most sold, but also number 2 most bought. So just to recap the most sold, we've got Zip, BHP, Pilbara Minerals, Core Lithium, and LKE. So looks like, Rob, I think you're checking in there. You've got Amir T and Jake Taylor. Is that the only winner that we have? The only winners that we have tonight? If so, fantastic to you both. That is wonderful. Stevie, you said, what do I get for being 50% correct with my guess? Well, Stevie, I figure you get a digital high five. There you go. That's pretty much all I can give you from this distance. However, maybe I could say that any Selfwealth user can go onto the Rask education site. That's our education site, and you can use the coupon code, which Rob might drop into the chat, which is actually, it's just Selfwealth, and you can get access to all of our beginner level courses for free, just for being a Selfwealth user. Just FYI, so keep that in mind. Okay, 50% of the trades. Yeah, that's right, Jason. You get 50% of the trades. You get half as many. No, just kidding. Next time, Stevie, I'm sure you'll use the insight of BHP paying a big dividend, and maybe we'll include ETFs in there too. Okay, let's get into it, guys, because we are 14.3 minutes into the show. So let's get into it. And for tonight, I've actually prepared some notes so you can kind of play along as I go through. I'm going to spend about 5 minutes, I hope, on each company. And if you like, please just submit your questions into the chat. Sen Shredder, you've asked, what is your personal net worth, Owen? It's 2022, so I think it's okay to ask someone that. It's not the 1990s with all the secrecy. That is a really good question. Did you know what? I don't know what it is, but people have a fascination with this question. It's the second most Googled thing if you put my name into Google, but I generally don't say. So wonderful. Good question. I like it. I'm pretty much an open book when it comes to everything else in my life, as well as what's in my portfolio. Two of the companies tonight are in my portfolio. I think many of them have been in my portfolio. And just so you know, Sen, by far the biggest investment I have is my own company. So I think that would help you out there. So Altium, what does it do? What does it do? Were the results good? So Altium is the company, the Australian/US company that creates the software which is used by engineers and designers to create printed circuit boards, kind of like the one you see here. I can't remember where this link goes, so let's click on it, and we'll see what happens. So if you want to design basically any type of device, so I'm holding up, you probably can't see it in the corner of the screen, but my phone and my AirPods, I've also got my Apple Watch on. So if you want to create anything, you have to put a printed circuit board on it if you want to connect it to the internet and make it smart. And that's what we see here. We see kind of like a motherboard if you pulled apart an old computer, and you see all of the transistors and everything on it. Altium creates the software which allows designers to do that. And at the end of the day, Altium's business is transitioning from one-off sales of access to the software to now increasingly subscriptions. As for headline results, we've got sales revenue up 23% to $221 million, which was ahead of my expectations. Profit of $55 million, up 57%. We've got dividends of 47 cents. That's over the full year, up 18%. And the outlook, I would phrase, is very positive because the company has given us some guidance of between $255 and $265 million. That's another 15 to 20% growth. And it's also one thing that Altium does, which kind of, I don't know, it rubs me a little bit the wrong way. One thing that Altium does is it actually publishes what it calls aspirational targets. So it tells you kind of what we're trying to do over the next 5 years. And you can track the performance over time. To get to that, they need about 90,000 subscribers to their new cloud-based subscription. And they're not quite there, and they have to do a bit of work to get to that, but it's a really interesting business. Altium's key competitors are Mentor Graphics, which is now owned by Siemens, and Cadence Systems in the United States. I believe the ticker symbol is CDNS. Let's just look that up real quick. I've got a Selfwealth right in front of me. Cadence Systems is the other key competitor here. Altium was my understanding is Altium was the first mover to go on cloud. So to move completely away from desktop and push into the cloud environment so people could work remotely on their designs and what have you. Another thing that Altium does, which is really impressive, and the thing that everyone that owns Altium shares can pay attention to, is this business right here. They call it Octopart. And basically you can think of Octopart as Google for all of the little things that go on your PCB. So all of the little transistors, the little wires, everything that goes on there, you can buy and you can search for through Octopart. So let's try an example search like this. We can see here that there's this tiny little thing that would go on a PCB. And we can click on it, and then we can find sellers of it, and we can see how much it costs for one, for 10,000, for whatever. And the whole point of this application is that Altium users can search for parts while they're designing, and they can figure out what it costs. And the really interesting thing that I think you can use this for is they report on the performance of Octopart. And you can basically say, well, if people are searching more in Octopart, then it's likely that the people are using the Altium software more. And that seems to be the case. Octopart shooting the lights out over the past year. So MD Kabir, you said, why do customers want to buy from Altium rather than from one of its competitors? The Annoying James says, did you talk about Altium before it jumped 20%? Yeah, so the Annoying James, I'll answer your question first. I've covered Altium and recommended it for our members for quite a few years now. And so we've covered it for quite a while, since before Autodesk tried to buy it out, since all of that My latest valuation, just for your benefit, and valuation is just as much art as science, is around about $31. So I'm pretty conservative with my forecast, I would say, given some of the things that we've had recently. So I think that's gives you an indication. So Charlie Munger says that, and it's a fantastic quote. Charlie Munger says that time is the friend of a wonderful business. And Warren Buffett kind of echoes that sentiment by saying you'd rather own a wonderful business at a fair price than a fair business at a wonderful price. Altium is the type of business that very rarely trades for cheap, air quotes cheap, multiples. So you've got to pay up to get to it, or buy it when the sentiment is really low. At the moment, sentiment is coming back. So Thomas, great. Welcome to the chat. Pleasure to have you. Mike, g'day, mate. Good evening, depending on where you are. Maybe good morning. I don't know. Depends where you are. So overall, I think this result from Altium was really impressive, and I think it's one of the most impressive companies on the ASX. It pays a dividend. It's growing fast. And why do people choose it over competitors? MD Kabir, that's the fantastic question. Altium basically does everything. There are dozens of different software packages available in the market, but basically, I'll just turn this off for a sec. But basically, the reason people choose Altium is it's got the reputation, but it's also got the network effect. It actually is quite expensive to get Altium software. So I think the average selling price, I could be wrong on this off the top of my head, is around about $2,500 US, whereas more expensive if you buy like a once-off license. But because Altium is now in the cloud and it's trying to take its design software and its search engine Octopart and be at like the center of connected, what it calls connected manufacturing, which is where basically a designer can design a PCB or a piece of equipment and it automatically gets sent to a factory and created, kind of like Tesla with its gigafactories. It doesn't have to go and use other software and whatever to try and connect to the factory. It automatically does that. And that's the big thing. So, Owen, what were your top two stocks when you predicted and grew the most? Tesla, blah, blah, blah. And what were the two stocks you predicted that fully tanked and you lost the most money? Lost the most money? Maybe EML. Oh, no. Slater and Gordon. Didn't lose all of mine. I lost some of my family's money as well. And another company called Refined, RFN. I don't think either of them are listed anymore. So that's full disclosure. The best performers, in terms of percent, one of them we'll cover tonight, which is Pro Medicus. And I don't know what the other one would be, maybe zero. So Stevie, you said, is it positive that sales are in USD and AUD currently weak? So a bonus. Yeah, it is. Jason, you said, oh, and also training for it versus the competitive products. So that makes it sticky. Correct, Jason, 100%. So any of the really important software companies in the world, Altium being one of them, obviously training designers and engineers to use it through universities and whatever is actually a huge advantage. That's why Microsoft, Google, Apple, they all try to get their software into the hands of primary school kids because they know that if they can get kids, the next generation, learning on their platform, they're going to favor that when they get into high school, university, and then into their careers. Luke, you've said, it seems Altium's split from SolidWorks hasn't had much of an impact. That's correct, Luke. Like when they formed with Dassault or SolidWorks, I thought that was a really impressive deal, and it's kind of gone by the wayside now, so they've moved on. All right, guys, I got to move on, but I'm sure we can come back to these in the future. So Stevie, you said the same thing. CBA did the same thing with Dolomite's accounts. All right, so EML Payments. This is a basket case when it comes to basically everything. I'll switch my screen back on. So EML Payments, what does it do? Let's start with that. So EML describes itself as a fintech enabler. I think everyone that doesn't really understand what EML does uses that phrase. And basically, it does reloadable gift cards, virtual accounts, and payments networks. So some of you may be familiar, say with like Selfwealth, with instant payment transfers, or maybe with Beamit, which is the other really popular one here in Australia. You can send and receive money to your friends or family instantly. You can do the same with Venmo in the United States and the Cash App through Square or Block. Basically, if you wanted to access that type of technology, you were a startup, you could use EML's gateways. And EML being a technology company that is involved strictly in payments, it would try and connect everything for you. And that's basically where EML sits. It started as like gift cards, and you might remember e-merchants. That's where the EML comes from. And it's evolved over time through acquisitions. Mike says, short EML. So I'm going to click this really quick and we'll be able to see what it does by going to the website. It's got a super flashy website. It's a pity some of the disclosures aren't as good. But basically you can see it, it prides itself on being everything payments. To get to where it is today, I think this is important to understand. To get to where it is today, EML has had to make a number of acquisitions. And based on what I'm about to cover, some of those acquisitions are quite on the nose, we could say. So I'll get to your question in a minute, Luke. Is EML a buy? I'll give you what I think. It's not necessarily, a prediction of the world. Matthew said SolidWorks. I did that way back when doing CAD engineering degree. Yeah, I used SolidWorks when I started my engineering degree, Matthew, and I thought it was awesome. That was like 10 years ago. Jeremy, welcome to the show. G'day to you. Raptor, I think you say, what would be EML's competitive advantage? And that's a fantastic question. I think the competitive advantage that EML would have is that basically it is able to take away the complexity of a lot of companies and startups that work across multiple geographies. So what we saw it under Tom Cregan, who abruptly quit in July 2022 and was replaced by Emma Shand. What we would have said prior to this would be that EML was basically the business that you could use to take away complexity and make it, make your life easier as a developer. So MD Kabir, how does EML make money? It's got 3 ways to do that. It does reloadable gift cards. So it can make money on what we call, air quotes in my little screen down the bottom, breakage revenue. So breakage revenue, if we just come back to me real quick, breakage revenue is if you've ever had a gift card and that gift card is expired and you thought, oh, bugger it, just whatever, it's expired. That's breakage revenue. So it can make money that way. It can also make money by clipping the ticket from payments going back and forth, and a few other ways it can make money, but those are the major ones. And so we can see here in terms of top level results, we can see deposit volume. So obviously the amount of money being deposited throughout the EML ecosystem, up 308%, but that was by an acquisition. So that's an acquisition. We can see, and that's what resulted in the digital payments GDV going up. Sales/revenue of $234 million, up 21%. That was the centennial and the benefits of a slight change to breakage revenue accounting. Profit, negative $4.8 million. That's an improvement from the negative $29 million. It's still a loss, but it's an improvement. The company did achieve more gross profit as more revenue came on board, but it also saw an increase in expenses. The outlook, and I've said who knows with an exclamation mark. And the reason that I say this, I don't like to be so coy when it comes to companies, particularly ones that I cover for our members. But basically, Emma Shand, who is a seasoned executive, she spent time, I think she might even still be with NASDAQ, as in like the stock exchange operator, as an executive. She's now the CEO, and she took over with, by all accounts, from what I could tell, and in speaking to investor relations, about a day's notice. So Emma is now conducting a thorough review, and I can't see, Plant One, you've made it. You're not late. You're here right now. So Anthony, you've said they clip from each gift card and interest on funds. Exactly. Maniac, your comments are visible. So we can see, so a lot of questions here. Jeremy, I can see you've asked a question. Owen, I have a tangential question. I saw there is a new LIC IPOing soon, H&G High Conviction. I'm keen to get your thoughts on investing in these at or just after the IPO / not personal financial advice. Jeremy, I haven't looked at the LIC in question, but I'll add it to the list of things that I can cover in the future when to invest in a listed investment company. I think it's best to invest in a listed investment company when the value of the share price is below the value of the NTA or what's inside the LIC. Okay, so back to EML. Emma Shand is currently doing a thorough review of the entire business. And this was, I thought, for once, after many years of heartache with EML and gut-wrenching roller coaster ride, Emma and Rob, who is the CFO, who's very, very switched on when it comes to the entire business, obviously, came out and said, we're going to do a review and we're going to present the results of our review to you, being the shareholders, in November. Unfortunately, then this morning, the company came out and said, and this was the headline of their announcement. You can see it in the top right-hand corner here, Centennial Fraud Incident. And it says here, EML is taking steps to investigate and understand the circumstances surrounding the fraud and has committed steps to recover any losses. EML is confident that the maximum amount of any losses will not exceed 5.5 million euros, but may be lower depending on the success of recovery actions. The fraudulent activity primarily occurred in August 2022, that's this month, and came to EML's attention yesterday, being Tuesday, August 23rd. A meeting of the board was convened early this morning for the purpose of informing the market. Now, that, for a payment network to have fraud is not unusual. That's a double negative. I'm not a lawyer, but it's one of those things. It's quite common that people who use payment networks use it for fraudulent reasons. It's unfortunate reality. So the reality is that, however, for EML, that it's made acquisitions, including Centennial. And Centennial, by the way, is a business that allows people in Europe to send and receive money account to account. So you can send it and receive it basically instantly. And so they made this acquisition, and this follows an acquisition. And I can see there have been, Rebecca's made mention of this, and a few of you had made mention of this. And at the end of the day, the company has made two acquisitions, this one of Centennial and another one of Prepaid Financial Services, which was originally in the United Kingdom, but then due to Brexit moved to Ireland, where it's got caught up in an investigation. And at the end of the day, it's EML has proven, under its former management at least, that its due diligence and its ability to make acquisitions may have been, in some respects, not all respects, but in some respects, not great. So the thing is now, the question is for everyone, right? The question is for everyone, with shares in EML being beaten down so far, is it still a buy or is it a sell now? And you can see that here. Shares have fallen from around $5.70 to $1.14. I haven't updated my latest valuation, but every time I do, I still end up in a position where I think it's reasonable value. However, I want to caveat that in a big way. I haven't updated it for the latest news. That's the first thing. Second thing is many, or not many, but some potential buyers of EML, as in big private equity companies, have approached EML and they've expressed their interest in acquiring the company and they've walked away. And that's not a good sign, because when a company is the subject of a takeover, typically what happens is there's due diligence and the company has to, quote unquote, open their books. They have to show the acquiring company some things to help it make a decision. And they've walked away. So Stevie said, for a very interesting read, look at PayPal's early days and how they were combating fraud and scams manually, and over time used machine learning. Yeah, interesting. Anthony said, CEO was also walked recently from EML. Yes, correct. How do you value EML? MD Kabir, you always ask this. I still use discounted cash flow, but you could use basically anything. BB, yeah, that due diligence. Yeah, maybe tongue in cheek there. And there's still work for EML to be done with the CBI, which is the Central Bank of Ireland regulator. So yeah, it's a tough one. There are actually many competitors for EML. Depending on what type, if you're in business to business or if you're in consumer, obviously consumer is extremely competitive, but it's all about enabling fintechs. So open banking and the like make it easier. So Jake Taylor, I can see you've got to go to work. Enjoy your night. Sen, you've asked one more question. You said, Owen, who do you support in the AFL and who wins the 2022 AFL Grand Final? Good question. I have no idea. So I do support the Hawks, but it's not our year, so I don't know. Good question, though. So Anthony said they were trading at $3 plus before COVID. They bought 2 duds, it seems. Yes, they did. That pesky due diligence. Indeed, Stevie. So that's EML. At the end of the day, I think it's a very, very high-risk company, given what we've seen recently, and the outcome of its recent review could go in very different directions. Rebecca, you said Ireland has very strict regulations. I saw when EML was based in Ireland. Christopher, you said go Melbourne. James says Collingwood. Oh, geez. BB's on my side at least. Okay, so next company. Let's quickly get to it. Probably many of you own this company. So Kogan.com, the company has had a roller coaster of a ride over the past little while. Kogan.com, obviously very, very familiar to many Australians because 3.5 million people shopped at Kogan.com in the last year, and around 300,000 odd Australians are members of their loyalty program, which is what happens when you click here. So Kogan First is Kogan's version of Amazon Prime. Here in Australia, Kogan is kind of the leading independent website for buying electronic goods, for buying mobile phone plans. Basically, it does everything right now. If we scroll right to the bottom, you can see all the different categories: insurance, cars, money, super, energy, credit cards, internet, pet insurance, car insurance, travel deals. You've got it right there. Jeremy said, what's AFL? Yeah, fair enough, Jeremy. If you're not in Melbourne, it's probably not as big of a deal. Although I've got some friends in Sydney who love their Sydney Swans. And Adelaide, God, hello everyone from WA, says Adam. The home of West Coast Eagles and Fremantle. Mike also coming in with another big short, saying short Kogan. And so Kogan is an online retailer. And basically what Kogan needs to be successful is volume of sales, because most retailers make very thin profit margins because they're very competitive. So they have to be price competitive, meaning they have to offer the lowest prices. If you compare a Samsung TV on Kogan versus a Samsung TV on Amazon, you're going to go with the cheapest one. You don't really care where it comes from. And that's, at the end of the day, that's what's required. And Kogan knows this. So sales revenue, revenue was down 8% to $700 million, 718. That's despite a 0.1% increase in the sales going through the platform to $1.18 billion. Marketplace sellers, this is interesting. So Kogan is offering up its platform, and you can join the Kogan platform. And I was checking this out today. You can join the Kogan platform. If you press apply now, it actually goes, of all things, to a Google form on the website. You can join the Kogan platform and sell your products on there. And that's good for Kogan because they can manage your inventory. They don't have to worry about your inventory. So Kogan's big problem over the past 2 years is to fulfill orders during COVID is they over-ordered and ended up with too much inventory. So we can see net profit down was negative. It was a loss of $35 million. That's down from a profit of 3.5. The number of paying members to Kogan First, 370,000, up 210%. They have an aspirational target of 1 million. The outlook, I would say, is probably better. They said in the July 2022 period. So this is after the end of the financial year. The financial year ends at June 30th for Kogan and many other companies. And they can see during the month of July, they made $1.5 million adjusted EBITDA for that. And as for operating costs, they reduced 19% year over year. So one of the things, and I'll bring up the news and announcements for Kogan really quickly, and we'll go here. We'll see the annual report, and you'll see, if I bring it up on the full screen. So if we go to the income statement, you will see here that it looks like Kogan has made a much, it's actually kind of pulled in a decent result. So if we go down to the cash flow statement, where are we? Cash flow statement. And we look, even though it's reported a loss, on a cash flow basis, Kogan's actually done very well. So they've got $61 million of net cash from their operations versus an outflow of $63 million the year before. And the reason this happens is that Kogan is what we call unwinding its revenue, its inventory. So it's not purchasing as much inventory. It's actually just selling what's already in the warehouse. So that obviously is a cash inflow. So Kogan's done really well from that. And if we go down, we can see, and sorry if I get a bit nerdy here in the notes for a second. So if we go down and we look at the notes, and you can see that which way the cash flow has gone. And if I zoom in for a second, sorry, this is for the die-hard value investors in the room. And you go to this note, and it's changes in assets and liabilities. You can see that they spent $89 million on inventory last year, but this year they've actually reduced that amount. So this is just the change in inventories. You can see that they've benefited. So they've got a benefit from not spending as much on inventory of $62 million. And that explains the reversal in these numbers. So at the end of the day, that won't go on forever. So Kogan will have to go into a normal state where it's purchasing inventory and so on and so forth. So I think I just wanted to bring that up. Maybe we can dive into Kogan in the future. It's not necessarily all bad news for Kogan. Like, it's still a business that is very popular. It's still a business that has some pretty bold targets and aligned management team. So I can see you all, Jason, I can see you agree with Mike. Short it to the bottom. So for me, for Kogan, for what it's worth, I don't short any companies, and I don't think it's actually advisable for a lot of private investors, to be honest. In fact, I speak to a lot of professional investors who do not short stocks at all. So short, by the way, is benefiting from when a company falls in value. So for me, it wasn't a great result for Kogan, but people knew that was coming. That's reflected in the Kogan share price. At the end of the day, if you use Kogan, by the way, I would love to know what you think of it. So if you just drop something in the chat, that would be great. Alex, you've asked the question, is Amazon the biggest threat to Kogan? Well, there's Amazon, there's eBay, there's also JB Hi-Fi, Alex. There are many different, I guess, competitors for it. So Amazon, yes, but to be honest, Jason, you've said, I'd argue Amazon is a bit more premium. Kogan is a bit more Aussie-wish. Yeah, I'd probably agree with that. Like, Kogan does do its own brands, which are kind of like Kogan home brands. So yeah. Okay, so Raymond, you've asked, you said wouldn't touch Kogan if it was the last stock. Okay, well, there you go. RL, you said, I use Kogan all the time, also a shareholder. There you go. I've used Kogan before, bought phones and so on and so forth. And sometimes the experience is a little bit interesting. I remember I bought one phone on Kogan, and it was actually from Hong Kong. And so it didn't come with the correct Australian charger, which I had to figure out for myself. So Pima, you've said never invest in Kogan. Next company. This company, which is a company that many of you probably are not familiar with, which is Kip McGrath Education. It's a tiny company, so I'm not going to spend too much time on it because I know many of you won't own it, but you may have visited a Kip McGrath Education Center as a child, or you may know it as a parent. Here's a photo of a Kip McGrath next to a Starbucks in what I can only assume is the UK. That's just one straight off Google. So Kip McGrath does tutoring, maths and English only. Kip McGrath charges around about $68 per session for your child to attend. Its competitors are TWE, which is on the ASX, and it's definitely a lesser experienced operator, but it's more tech focused than Kip McGrath. So you can go in person to a Kip McGrath, or you can do it online. Kip McGrath has places all around the world. So if we look here, we can see just in Australia, but if we zoom out and we go, say, over to the UK, where are we? Here we go. Let's zoom in there. Let's bring that up. There are actually a lot of sites in the UK, and it's not coming up for me. Let's try this. London. See if it comes up. Or maybe it's because I'm on the Australian site. But there's a heap in London. In fact, Kip McGrath's, too many Ks tonight, has a massive presence over there. So Kip McGrath, you can get free assessments online. I know people that have used it. I know people that have been. Over the years, since the 1970s, it's actually changed management. So it's changed from Kip, who was the founder, to Storm, who is his son. And Storm currently runs the business from Newcastle. In terms of sales, up 28% to $24 million. Profit, up 8% to 1.9, dividend of 2 cents per share over the full year, 1 cent per share. What you'll find, and I'll explain this throughout tonight's session, is that if there is if there is a founder or a family that's still involved in a company, you often find they have a preference for dividends because they love those fully franked dividends. The number of student lessons through Kip McGrath was 119,000, up from 68,000. Corporate centers and lesson fees are things that are driving it. So in the past, there was a time when Kip McGrath, basically all of the sites that you would go to were franchised, and the franchise would just pay a fee to Kip McGrath for that, for the right to use its branding. And at the time, many of those deals were just $10,000, $10,000 a year, and you get marketing and you get the branding. It's kind of one of those business in a box type ideas, which so often are very difficult to run. And at the end of the day, what happened was, as the businesses got bigger and bigger and bigger, Kip McGrath wasn't benefiting as they were growing. So a few years ago, Storm came in, and you'll see in the share price, I'll bring that up. You can't really see, it doesn't go back far enough, but you can see in 2012, Kip McGrath traded at 4.5 cents per share. It got down to a low of 2 cents, and now it's got back up to around about $1. And overall, the business is trying to now take back some of its sites and start offering some online versions of its education, which have lots of synergies, but also come with higher costs. And we can see that here. One other thing to keep in mind, if you do want to learn more about the Kip McGrath business, I did an interview with the CEO, Storm McGrath. You can just Google Rask, Storm McGrath, and you'll find it there. Jason, you've asked, Owen, would you say it's good to value at present price? Do you have a valuation on KME? I do. I just don't have it off the top of my head, and I haven't adjusted it yet. I can't remember what it was, Jason. Otherwise, I would tell you. I just don't know what it is. So I apologize. Raymond, if you're watching on Facebook, you can jump across to the Selfwealth YouTube channel. That's where you'll see all of the comments. I can see your comments coming through on my end, but everyone else might not be able to see it. Robin, you've said, been around a long time. Are they still franchised? So a lot of the Kip McGrath sites are now being brought back in. So basically what happens in a business's life cycle, and I'll stop sharing just a second. What happens in a business's life cycle is, and Peter Lynch, the author of One Up on Wall Street, was a big advocate of this. He said, franchise models are fantastic. We had Scott Phillips on the show who said the same thing. Franchise models are like Schnitz, if you've got one of them near, KFC, these types of businesses. Because what happens is you get rich using other people's money is the basic idea. So the way it works is you, as the person who owns all of the brand, like Kip McGrath, the company here, you say to a teacher, hey, why don't you open a Kip McGrath store, and all you've got to pay us is $10,000 a year, and you can use our branding and we'll send customers to you. And so you get that $10,000 a year and it costs you nothing. But what happens eventually is those strategies tend to run their course. And what we see with a lot of companies, they kind of bring the franchises back in-house. And the reason that this can be valuable, and this is what Storm talks about in the podcast, is that when you have a network of sites that are franchised, you can look, because you can see all the numbers, the revenue, the sales, the profits, all that. And you can say, well, that one in the UK is better than that one. So I'm going to buy that one. I'm going to buy this one. I'm going to buy that one. And you can start to buy the stores back that you think, or the sites that you think are better. And we see that right across the world with different types of franchise networks. And that's what Kip McGrath's trying to do now. And if the sites don't want, or the partners don't want to be bought back, Kip McGrath's also offering them a gold partnership, which comes with certain benefits. Rebecca, you said the customer base increased because of lockdowns and now may not see much growth. Yeah, so that's a good point. So as they come back, we see that students and parents are preferring kind of like a hybrid environment where they're in person and online, where that's the benefit of Kip McGrath, is it does both. So it also helps for people in regional areas to have that online offering. So the next company, I can see some, Andy, you've said similar to Collins Food and KFC in Australia. Yeah, and similar to Domino's Pizza, which Scott talks about. MD Kabir, you said, what's the competitive advantage of KME? I like how you always bring it back to first principles. So Kip McGrath, what's its competitive advantage? I wouldn't say it's like a deep moat or a wide moat by any stretch, MD. What I would say is that it has a lot of domain experience. So it has a lot of expertise in education. You'll get that. That will come across if you hear from Storm. So you would have to keep your wits about you, make sure it's still growing, make sure they're allocating capital pretty well, and make sure they're not stretching their balance sheet too thin, which is, I think, a thing that we're all kind of looking at the moment. But they've got a good brand. They've been around for 50 years now. So something to keep in mind. Okay, next company. Let's talk about it quickly. I'm not going to spend too much time on it. We know what it does. Xero, it's a cloud accounting software. Full disclosure, I own shares in this company. So it's a leader in cloud accounting, so accounting software in Australia and New Zealand, and hopefully it wants to be in the UK. It's been sold down recently. It wasn't actually a result. It was actually the annual general meeting. And during that, Steve Vamos, who's the CEO, made a comment that in the UK, their customer acquisition hasn't been as good. So they haven't got as many subscribers as they thought they would. But so Xero basically needs to succeed in the UK for its current valuation to stack up. So if we drop back quickly to Xero, I'm going to be really quick. I've just noticed the time. Jeez. Xero has been sold down recently. I'm not really too worried about that for the long term, but the company needs to succeed in the UK right now because there's a massive change underway. In the UK, by April 2024, every small business in the UK needs to use approved accounting software to record their invoices and to record their expenses and do all of their accounting. And Xero, Sage, which is the other competitor there, and Intuit, which is QuickBooks, all know this, and they're all vying for a spot. Xero's just launched its Xero Go to try and capitalize on this, which is like a freemium model, so you can download the app and get started, take photos of your invoices, automatically record them. So we will see what happens with the business. It also made an announcement saying the operating costs were coming in at the lower end of their range, meaning that they're not going to spend as much as they sought. Raymond, you said, can we talk about the lithium, the exciting stuff? Yes, in just a moment. Stevie said, my payslips have Xero in the domain name, so the company I work for must use them. Pretty good from what I've seen. Yeah, they're frequently rated as the most. They're frequently rated as the most user friendly. So. BB, you said my kid charges $30 an hour for maths tutoring. BB, well, that's much better. That's much more compelling than Kit McGrath. $30 versus 68. There you go. So what competitive advantage you might be saying, or at least your child might be. All right, Raymond, you've said, can we talk about lithium, the exciting stuff? Well, Raymond, you got it. So Pilbara Minerals is, off the top of my head, the largest pure play lithium producer in Australia. And I'm just going to get up the ACDC ETF from ETF Securities. So I've talked about Pilbara Minerals a lot. I think Jeremy mentioned it last week or the week before as something that we should cover a bit more. You can see that it's included in the ACDC ETF as the top holding in the ACDC ETF, which targets battery technologies and lithium producers. So if we go back and we can see, if we're bringing this up correctly, Pilbara Minerals, it's shot the lights out recently in terms of its performance. If we go to the last 5 years, the share price chart, and if we go to the last year, even just as compelling. If we go down to the forecast from analysts, let's see what we've got. I actually haven't looked at this yet. So we can see the revenue forecast and the net profit forecasts from analysts are pointing upwards. So we've just got this set of results, and we've got another set of results that analysts are forecasting for. So what did it do? Why is it so impressive? So Pilbara Minerals has moved into production of ore. It's basically digging what eventually becomes lithium out of the ground. It's got a hard rock project called Pilgangoora in WA. And it's 120 kilometers from Port Hedland, which for those of you that aren't from WA, is a major mining port. And it's this proximity or this distance, Pilbara. Artian, I think you've corrected me on this before. It's not Pilbara, it's Pilbara. There we go. I got it. Pilbara. There we go. Too quick. I'm a Victorian, so you can see where I'm coming from. So the project has 2 mines, effectively, or 2 plants that service it. One of those is spinning up at the moment, and the company, it says, even at full production capacity, it will last for 26 years, which is something that I always think about. In terms of revenue, $1.19 billion, up 500%. Net profit, $562 million, up from a loss of $51 million last year. It's got a net cash balance, so that's all the cash in the bank minus the debt, $714 million. Raymond from WA, welcome. So why has this happened? Why has this company come out of nowhere and produced such amazing volumes? Well, you can see here, I've just got a little bit of a explainer down here. The huge growth in sales and revenues basically come from two things. One, extremely low costs. And two, hugely impressive lithium prices. And as volume has come on board, as they've started to produce, and the world has remained in a lithium shortfall as people are using batteries for everything, including automotive use, basically the lithium price has kept going up. And Pilbara Minerals has come on board with a low-cost, scalable project in WA. And so we can see that there. So the cash flow from this business is incredible. I don't think in my life, I don't think I've seen a company go from cash flow negative to cash flow positive in the same scale. Maybe Fortescue or maybe A2 Milk quite a few years ago. And importantly, you can see the reserves here. You can see the reserves got 157 million tons of ore in the ground, and that was last June. In October, it was re-estimated at 162 million, and the company plans to get to about 1 million tons a year of production. And we can see the lithium price here, and if I go back in time, I think I can do this. We can see the lithium price, and this is in Chinese yuan, I think, the pricing here. So that's why it says 487,000, which I don't think is accurate anyway, necessarily. And so we can see the pricing here of lithium has gone through the roof. I was reading an analyst report today. I think it was it's Macquarie. From Macquarie on the lithium, their forecast for lithium is for lithium prices to go even higher because they suspect electric vehicle adoption is going to push it through the roof. So Andy, you've asked, what are your thoughts on the predicted oversupply of lithium and also increase of cheaper alternatives in South America affecting Pilbara Minerals? That's a great point. Is it Alchem, Andy, that's in the Alchem that's listed on the ASX that has the operation, or is that's Galaxy Resources? I can't remember off the top of my head. Oh, it's Recobre. So what are my thoughts? Well, to be honest, Andy, I don't really have any. I don't really have any special insight into predicting lithium supply or demand, and that's probably why I don't tend to cover it very much for the show. But that's why I was reading broker research today, and Macquarie was suggesting that even though the lithium market tipped into oversupply, I think in July, the expectation is that it will be in deficit because of stimulus in the US and in China as they really push for the shift towards electric vehicles. And so that's all going to mean more batteries in circulation. And so I think the research suggested that it could still be a couple of years before we're back into sustainable oversupply, meaning that prices of lithium would come down. Up 6% today, says Robin. One of the brokers, Morgan Stanley, there you go, knocked the share price down about a month ago by saying lithium price would fall. I just can't see that happening. Can you? I just answered that one. So, Robin, you said they may have to pay a dividend with all of that cash. The one thing that happens, Robin, and I am sorry for anyone that does own the company and or any mining company in general. What tends to happen is if it's very rare for a company like this to make it through exploration and through to construction and production and still have high prices in the commodity. But what tends to happen is then the companies don't know what to do with the cash and end up making acquisitions, or they make poor decisions in terms of capital allocation. And so, I would hope that maybe, they do consider giving some of that money back in the form of a dividend. We can see here the revenue, and you can see the costs pretty flat. But what the really, really impressive thing about Pilbara Minerals is the expenses. The expenses are so low, as a percentage of revenue. And that's because they've hit what we call operating leverage. So John Flint, you said, besides lithium, any thoughts on the Trove magnesium and what they're trying to do? No, John, I do not. Does that have a ticker symbol, John? If you might be able to help me out with that. Isn't lithium just another boom bust, says Michael? Well, that's the thing. Michael, I'm not claiming to have any special insight. I'm just coming here with the results and saying that on paper, they were extremely impressive. Extremely impressive. Like the flicker in what we call operating leverage, so where revenue takes off but costs don't, is just superb. So we can see there the revenue, which we've covered before, that's only to 2021. And if we look at net profit, we can see that it was negative, but now we know it's hugely positive. So it would be on my screen, up above the Refinitiv sign there. So really, really impressive result. So I can see a lot of comments have come through. Wait until the recession's hit and the governments have no money to spend, says Big Catist. Galaxy plus Orocobre amalgamated to become Alky. That's right, Epicris. Okay, so I got it. So Raymond, you've said core lithium is the next for production behind Pilbara Minerals. How far away do you think core lithium is, Raymond? Let us know on Facebook. Okay, so I'm running overtime, so I'm going to quickly get to the next company. But if you want, we can do a deep dive into lithium. And I think one of the things that's become apparent, which many of you will no doubt want to see, is that I think it's about time that we got someone who is an expert in lithium, whether it's one of these company CEOs or something like that, on the show. The next company, actually, I didn't. I showed you the prices. So Cochlear, which many of you will be familiar with. You've probably seen people walking around the street that have implantable hearing aids on the back of their ear. It sits behind their ear here. Cochlear is the world leader in implantable hearing aids. If there's a fantastic article on our RAS Media website, and I'll drop it in the chat for you if you are interested. This is an article written quite a few years ago in 2019 by a guy called Andrew, and he wrote for our website. And he talked about his journey with Cochlear and how hard it was and why he made a decision to go with Cochlear. So, and one of the big reasons that he made a decision to go with Cochlear is that it spends so much on research and development. So it's constantly getting better. If you think about it, if you stick a medical device in your head, because that's how it works, you stick a medical device in your head, you want to know that the company that supplies that is going to continue to maintain it, is going to continue to have a thriving ecosystem around it. So, Jason, you've said, would love a deep dive on lithium companies, benefits, downsides. Yeah, we can go in. Maybe I might even see if one of the investment bank analysts will come on the show. So yeah, we can get stuck into it. So, love it. So billions of dollars will be required to be spent on electricity networks to host electric vehicle adoption. Take it from an electrical engineer working on this with decades of experience. Well, Big Catus, that's fascinating. So you're saying we'll need to upgrade electricity networks. You know what? Here in Melbourne, there's a car park next door, and obviously they've got parking bays for Teslas and electric vehicles. And when I started coming here about 2 or 3 years ago, there would only ever be one electric vehicle in there. And now they're banked up. Now in the parking garage, they're banked up. So yeah, I think that's really interesting. So that's my scuttlebutt for today. So Cochlear devices are sold through recommending doctors and audiologists. So it's not as straightforward as you walk up to Cochlear, you go, hey, can I have that thing? I'll go put it in my head. You actually have to get a doctor or an audiologist to do constant tests on you. And even once you get the implantable device, there's no guarantee that it will work. So Roger, you've said Cochlear has the first mover advantages. They've been doing it for decades. So BB said maybe ETF securities analyst on lithium. Yeah, I don't think they have a specialist on lithium, but I can find out. Raptor, you said get Elon Musk as a guest comment on lithium's future. Yeah, great idea. Okay, so just in terms of Cochlear sales, up 10%. In implants, the actual implants themselves are up 10%, but the services for upgrades and so on and so forth was up 15%. Acoustics revenue of $202 million, which is great to see, up 29%. Total units installed, 38,000 182, up 5%. So profit, 277 million up, and I'm using underlying profit here, up 18%. They're investing to 100 to 150 million dollars in cloud technology over the next 4 to 5 years, which they like to exclude from their net profit figure, but I don't think they should. So the figures might be a little bit different depending on whether you take the official statutory results or their underlying results. By the way, I should have made this clear when we talked about reporting season. Anytime I say underlying, normalized, I don't know what the other phrases are, but underlying and normalized, typically what that means is we exclude certain things from the company results to make a calculation. Dividends for the full year of $3, up 18%. It should be a payout ratio of 71%, meaning that they've paid out 71% of their profit as dividends, and they have a target of 70%. The outlook for Cochlear is actually pretty positive. They're guiding for more profit in the year ahead, which is a 5 to 10% increase. And they are also, to get more devices in people's heads, they're spending more on their direct-to-consumer marketing and ENT, meaning like ear, nose, and throat clinics. So Cochlear, world leader. When you go and look at the shares in Selfwealth or whatever, you will find that they're almost never cheap. The last time that Cochlear shares were really cheap was back in 2014, 2015, I'm going to guess. Yeah, it's when they fell from $81, they fell back to $57. I remember my old colleague who's been on the show before, Motley Fool, Chief Investment Officer Scott Phillips. He was on the national television at the time. And someone asked him, they said, "What do you think is a good investment right now?" And he said, "Cochlear." And they're like, "Duh, that sounds pretty crazy. Why would you invest in Cochlear now? They've just had this recall. They've blah, 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 blah." And he said, "Well, when you go to put something in your head, chances are you're going to pick the best. And Cochlear is the best. So even after all of this, you're not going to choose a Chinese knockoff to put in your head just because it's a little bit cheaper. You're going to choose something that works." So I think if we see a company like this falter again is when you try and buy it. Roger said, "Cochlear is the best for those with born deafness and those whom hearing aids have failed." Yes. That article that I put in the link is a fantastic read if you want to understand what goes through someone's head when they're talking about decision making. So I can see there's a conversation here with B. Caddis talking about the networks needing to be upgraded. It's fascinating. So anyway, so let's continue on. We've got a couple more to go. The next one is Treasury Wines. If you're not familiar with Treasury Wines, it sells wine. But it not only does wine, it does the premium brands of wine. And it's since divided into three, business lines. You've got the core Penfolds business line here. Then you've got Treasury Americas, which makes sense. That's where they're selling. And then you've got the Treasury premium brands down the end here. And basically what Treasury is trying to do is it's trying to separate its Penfolds brands from its other brands. And I think deep down, the real reason for this was Treasury was trying to see if someone would acquire them because they struggled. So what happened a couple of years ago is with the big trade war between Australia and China, China said, "Well, hey, you guys love your wine. You're not going to sell it in our country anymore." And basically, they put import tariffs on wine from Australia that were so extensive that it made it basically impossible for Treasury Wines to sell its wine into China. And at the time, China was a massive growth engine for Treasury Wines. If you go to places in Asia, Penfolds wine is like the primo wine. It is widely known and drunk at like dinner parties and so on and so forth. Myself, I can't afford a Penfolds wine. Maybe that was the question that Sen was trying to ask earlier on. I stick to 10, maybe $20 bottles of wine. I'll give you my tip for a Tempranillo. It is a Radio Boca from Spain. This is not a live session for talking about our favorite wine, but that's one of my favorite for a light blend. Not a Penfolds and not a Treasury Wine Estates. Anyway, back to the company. The company reports, just so you know, the company reports this thing called NSR, which is net selling revenue, and they also report it per case. And so what that means is basically they're trying to break it down for you of what do they actually receive from selling their wine and how much do they get per case. And the revenue that they earn over the year was actually down, and that's because of the China thing that I just mentioned. But the NSR, or the net selling revenue per case, was up 16% to $97.30. And the reason why the value per case was up was because simply they're selling more premium wines. They've made an acquisition in the US called Frank Valley Wines or Frank Valley Estates, and they've just more recently made an acquisition in Bordeaux, and they're just trying to bring better wines to market. Wrapped as a still drink cask wine, got to make more profitable trades before graduating to bottled wines. Mike says TWE going good. Selfwealth / Rob says, for those in Melbourne, great wine, pick it, Bahama Gold. $20 for 1 liter of the good stuff. Well, there you go. That's what keeps Rob going. He might even have one right now. So BB, that is not the sommelier advice. BB, yes, it's not. This is just me giving you unsolicited advice on wine. So anyway, so ultimately, decent outlook from Treasury Wines. They're going to cost out. They're going to focus on their premium wines. 31 cents per share is the dividend. Anytime you see CPS, by the way, if you're new to investing, CPS just means cents per share. 69% of profits being paid out as a dividend. That's at the upper range of their guidance. They're adjusting as much as they can to their premium brands, 83%. And they've offloaded their commercial business. So what do they mean by commercial? They basically got their mass market wines and they're not doing them anymore. They're trying to push them to one side. It expects its profit margins to improve as it costs out and as it increases. That's not for them, by the way. As it expands its premium range and focuses on costs. Treasury Wines is one of those businesses, by the way, which has a pretty good long-term track record, but recently it's really struggled with all the changes to China. And it's still got to succeed in the US, which is hard. So that's what B. Caddis says right here. Growth in the premium wine industry was really driven by Chinese buyers. Absolutely it was. And so that's where Treasury Wine is struggling right now. Okay, so this is another one that I brought up earlier on, which is Pro Medicus. For those that know me or follow Andrew Page, who was on the show recently, or Matt Joss from Maven Funds, or Claude Walker from A Rich Life, you will know that we all of us ex-Motley Fool crew, we do like Pro Medicus as a business. MD Kabir, you've asked, what's the competitive advantage of Treasury Wines? Well, you can buy wine from anyone, MD, but the focus on premium brands is basically where they're trying to forge their competitive advantage, right? They're trying to get more premium wines in more premium shelf space, in more cellars, in more restaurants around the world. So they've signed, if you go to the AFL and you want a premium wine, chances are it's a Treasury wine. If you go to the Australian Open, if you prefer tennis, that's one there. Nikki, you've corrected me here. I like this quote. You said, thanks for saying Pilbara. Is that how we say it in Victoria? Pilbara is how I'm supposed to say it. If I ever come to WA, which I hope to soon, by the way, I'm actually going to go up to, is it Exmouth or Exmouth? I'm going to go up and swim with the whale sharks early next year. I'm really looking forward to that. If I ever come over there, I'm going to have to get my act together, because if I'm saying this sort of stuff as a Victorian, I'm going to be noticed. So I will come over and I will say it correctly when I get there. Yeah, I'm not going to, Big Cactus, I don't even know what you said there about Rothschild, but I'm not going to even try and pronounce that. It sounds like an expensive wine. So Pro Medicus reported its results, revenue up 38% to 93.5 million. Basically, well, why did that happen? Well, because Pro Medicus does software for radiology clinics and hospitals. You can send and receive a 5 gigabyte image, a medical image, in less than a couple of seconds. You can receive it on your iPhone, on your iPad, if you're a doctor or a radiologist, so on and so forth. And it does that through streaming technology, which is yet to be replicated around the world. It's replacing all of the legacy systems where you have what's called PACS machines or PACS technology, which is basically, in the past, if you wanted to inspect a medical image, you would have to send it from where the image was taken through a server network and then have it inspected on a screen. But now Pro Medicus has basically changed that technology where it streams. Think of it like a Netflix movie that streams rapidly fast to any type of device. More and more clients are adopting a cloud-first Pro Medicus version. Its subsidiary is known as Visage Imaging. The way Pro Medicus grows and the reason why it keeps winning other than being the best technology and implementing really fast and successfully in hospitals, is Pro Medicus actually, for most of its contracts, makes money from each exam or like each time a medical image is inspected. And so what that means is that as the world returns to normal types of volumes of images, Pro Medicus is going to earn more and more revenue. Not only that, it's signed the Mayo Clinic many years ago. For those of you that have heard me talk about this before, Dr. Sam Hupert from Pro Medicus, I first saw him present maybe 5 years ago. It was probably longer than that, to be honest. Yeah, it would have been longer than that. It would have been more like 7 years ago. And at the time, he was just like a kid in a candy store showing everyone. And I was at a UBS investment lunch. It sounds more fancy than it was. And he was showing everyone this image and how his iPhone can do it. And it's a fantastic piece of technology. And he was showing this image because he just won the Mayo Clinic, which is probably the world's most recognizable hospital system in the United States. And since then, everyone has followed. So Pro Medicus signs these long-term agreements. It gets its software into hospitals, and then it stays there. One of the comments in the most recent update was that Pro Medicus, one of the things that Sam was really proud of is that a lot of the original deals that they signed for 5 years or more have now rolled over, and the customers, being the hospitals, have actually signed on for 5 years or longer, again at higher prices. So that's a huge endorsement of the technology. So dividends, massive dividends being paid, well, massive in respect of where the company was quite a few years ago, up 47% year over year to 22 cents per share, fully franked. When co-founders like Sam, who I've done an interview with, if you want to Google Sam's name and Rask, you'll see it come up. I've done an interview with him where he talks about the whole business end to end, as well as what he expects in the future. Sam and Anthony still own a huge chunk of shares in the company. And I was actually near their office the other day, and I think I saw Sam driving in a supercar. Maybe that's been paid for with dividends. But again, I've kept the wrong text in here. And this shouldn't be here. Ultimately, the outlook for Pro Medicus is really strong. I've actually got it up the top here. Over the next 5 years, they've already got a minimum amount of revenue banked, which is $420 million and growing. So Pro Medicus, I think the shares are really expensive, by the way. So I still own shares, but I only have half of my original holding. And I think I would want to wait for it to pull back a bit before I bought shares because I think it's expensive. It'd be an electric supercar, says Raymond. I'm not 100% sure about that. It looked like a Porsche or some sort of like, I don't know my cars that well, Raymond, to be honest. But I'd say maybe it was like, I don't know, some sort of like McLaren or something. I don't know. It was really impressive, whatever it was. So fantastic. Does it justify a PE ratio of 121? Probably not, Bcatist. I think they're moving into artificial intelligence. They've got the One Viewer. They've got the vendor neutral archive. So they've got heaps of other products that they're rolling out. And so I could see a company like Pro Medicus with $200 million of annual revenue in 5 years. But does that justify the current price? Well, maybe not. We've got so Raptor is PME more of a hold or a buy? I'd say more of a hold, Raptor, for me. Jason, you've said, isn't Volpara a great competitor to PME? I'd say it's the other way around, Jason. So Volpara does breast density scans and so on and so forth. So Volpara does more like on the breast side of things, whereas Pro Medicus does kind of like everything and has launched its own breast density product. So it's more Pro Medicus pushing into Volpara's territory than it is Volpara pushing into Pro Medicus's territory, if that makes sense. Yeah, so that's right, Anthony. It's the MD Kabir, you've asked, is PME a market leader? Yes, it is. If you ask Sam when he presents, the last time I heard him say it, so there are two ways you can monitor whether Pro Medicus is the market leader. Well, two simple ways. The first is you hear the CEO say, we think our technology is at least 2 years ahead of the competition. And that's He's saying that with response to what his customers are telling him. And the second question, which is always asked by Claude from A Rich Life on the investors call, is, "Hi Sam, have you lost one tender that you've gone for yet?" So meaning that if there's been a hospital that's come up and you've applied to have your software installed, have you lost that tender? And the answer is no. So, for most cases, for most normal cases. So people are still going with the software. Okay. Last company, last but probably not least, it's the one I haven't done as much work on today because the results only came out today. NetWealth, it is the software platform for financial advisors. Revenue up 20% to 173 million. Net profit up 3% only to 55 million. Why? Because employee costs and a few other things rose along with it. Dividends of 20 cents per share over the full year, up 7.5%. Families love fully franked dividends. And the family that runs NetWealth and founded it own more than 50%. So that means more than 50% of the dividend is going to them. The outlook, there wasn't anything really specific, but it was mostly positive. They just said that they expect to benefit as more money comes onto the platform. So that's what they call net inflows. So if you're a financial advisor and you use NetWealth software, or you're an investor and you use NetWealth software, what they're basically saying is people are putting more money through the platform. So one thing that I've noticed, with NetWealth over the years is that it tends to underpromise and overdeliver. There is a direct competitor to NetWealth on the ASX. Actually, there's three of them. Hub24 is probably the biggest competitor. You can see it there. And Premium is another one. And then the other one, which not a lot of people really know this, but actually Macquarie Group, so Macquarie being the bank, is actually one of the biggest competitors to NetWealth, and they're growing very quickly. So there's plenty of competition. NetWealth and Hub, being technology companies, are basically benefiting from all of the big banks getting out of financial advice. And so financial advisors choose to go with Hub or NetWealth. And you can see like the growth of the industry, which is often disclosed in the NetWealth presentations. We've got a slight change. It was normally a father and son duo that run NetWealth as co-CEO. One of them is stepping back to be an executive director, no longer the managing director. He's passing on that baton. And that is NetWealth. It's a really interesting company. The company itself, like most technology companies, has been quite volatile lately. Today it was up 7%. NetWealth should continue to grow as a business. It should continue to grow. But I think the important thing to remember is you want to pay a good price for the shares. At $14, it's probably better value than when it was at $17. I think the valuation, I could be wrong, but I think it was like low teens. My latest valuation, I could be wrong there, so don't hold me to that. So I think the key indicators of NetWealth success are more accounts, so more financial advisors using it, which you can see here. It was up 19%. And also bigger balances of people on the platform, which is also going up because that means more fees typically. Not always the case, depending on the structure, but it typically means more fees. For companies like these that are in these industries that are kind of consolidating, I often think that when you're investing in something like this, it's often better to invest a little bit in lots of different companies that could win. And then once you know who is winning, then you consolidate your position. And that was actually the idea in this book, Investing in High Technology. So this book is actually, if you want to understand what goes into picking companies that are in rapidly growing industries and what makes them a success and what doesn't, you should really read this book. It was written I think it was originally written in 1997, but it is a fantastic book on how to invest in these types of situations. So if you're looking to advance your investing, this is one thing that you can definitely pick up. It's not that expensive. Well, this one's $87. Don't get the hardcover, get the soft, and it'll be cheaper. So GC, you've said, whale shark season has finished, I thought. I swam with them in June, late March to the end of July season. Yeah, that's right. I'm going in March next year over to Exmouth GC. That's why I said early next year. MD Kabir, you asked, what does NetWealth software do? So NetWealth software basically does everything for a financial planner, but it also specializes, it's probably one of its competitive advantages, actually, if that's going to be your next question, is it actually specializes in servicing high net worth clients as well. So if you've got $10 million, you've got a portfolio of bits and pieces everywhere, you would use NetWealth, and it would manage, you could put in your investments, you track your performance, your tax, and you could also use it to swap between investments. So if you have a managed fund or you have an ETF, you can do that all in one place. So Mwanza Uchuki, you've said, Owen, the platform cost is expensive compared to its competitors. Yeah, and that's the thing. So Mwanza, one of the things that we would want to watch with NetWealth and with Hub is if it's so competitive, does that drive down prices or does it not? There was this thing that happened quite a few years ago where it was when interest rates were higher, some of these platforms, what they would do is they would actually offer some of the interest that they would receive back to financial advisors. So the advisors would be incentivized to keep people on the platform, even, maybe if it's not even in their interest. So it would keep them on the platform. But when interest rates shrank, the benefits of using one of the platforms continued to decline. But as interest rates go back up, maybe we see a return of that type of behavior where people stay on platform and are willing to accept higher fees in exchange for interest. So Robin said, one thing with platforms is their revenue aligns with funds under management, which relies on the share market success too, meaning your market falls, you as an investor may get a double hit. Yeah, so Robin, what you're referring to for everyone else is many of the platforms make more money based on how much money is invested on the platform. That's true to an extent. When the market goes through a wobbly patch like we've seen recently, the key things that you want to watch are the number of accounts, not the FUM. Because if you're a long-term investor, what's the number one indicator for future success? Well, it's the number of customers. And if we know customers are joining now, when the stock market does come back, and we do see that benefit come back from higher values, you want to be invested in a company that is continuing to add customers, so even when the market's down. I think that's important, especially now with the exodus that's happening in financial advice. Mike, I know this is a joke, but you said, does the book reject Elizabeth Holmes? It may or it may not. Maybe it was a bit before. I don't even know if Elizabeth Holmes was born then, being of Theranos fame. As always, I end with a quote, and thank you for sticking with us extra time tonight, Rob, and I really appreciate it. This one's from Charlie Munger. He says, in my whole life, I have known no wise people over a broad subject matter area who didn't read all the time. None, zero. You'd be amazed at how much Warren reads and how much I read. My children laugh at me. They think I'm a book with a couple of legs sticking out. That's from Charlie Munger, none other. And we've talked about this before. I don't think it's any surprise that some of the greatest investors in the world are also fantastic writers. And many of them talk about how much they read. They read everything. Religiously, they read. Whether it's a book, whether it's anything else. They just come to investing as curious people. And one of the ways that you can absorb information is through reading. Just like that book that I just mentioned, go and read that book if you haven't already. Read the annual reports of companies and you'll discover more about what they do. If you haven't already, please be sure to hit subscribe on YouTube, Selfwealth's YouTube. The subscriber numbers are the number one thing that Rob and I look at to judge if you like the show. So if you do like the show, please hit subscribe. Send Rob your requests for future topics as always. Pocket full of shell. You said, great session tonight, boys. Great company in the Selfwealth live community. It always is great company. If you're going to learn, you're going to get some ideas. This is the way to do it. Raymond, you said, who makes up these analysts who add price targets to stocks inside Selfwealth? I have noticed that they're not always aligned. If the stock drops, it seems forecasters change, which means the analysts dynamically assess these on a daily basis. I can answer that question for you, and I'll do it in a few ways. So first of all, when you go into the Selfwealth account, you might notice that there are analyst valuations and there are analyst estimates for all different types of things. Now, I don't really trust analyst estimates that much, Raymond, because what happens is they change, and analysts tend to be very short-term focused. I think, as an industry, I think there is a difference between a good analyst and a good investor. A good analyst might be good with numbers and might be able to predict what the next year's revenue is going to be within 2%. But does that make them a good investor? Definitely not. You could be the best analyst in the world, but have horrible EQ or emotional intelligence, which would result in you having a very poor investment experience. And so it's important to remember that when these things come in, you take them with a grain of salt. You can use this as more like a sense of what's the industry doing. So you can see all the different here. Like for what company is this? For net wealth, for the year ahead being 23, the most bullish or optimistic revenue target is 220 million, and the most negative is 197. So there's $23 million difference between those two analysts. But the other thing to keep in mind, and something that you alluded to, which is something right back in the heyday of Selfwealth Live, we talked about this. If you look at this here, this is something that I've covered a lot. And if you look, you've got the share price in the dotted black line, and you've got the analyst targets in green. Typically what we see is analysts are most optimistic when a share price has gone up, and they're most negative when it's gone down. And this is what happens with investing, right? Is that oftentimes you don't want to be thinking what the crowd is thinking. You should be confident in your research, confident in your opinion, not to the point where you're arrogant or what's the phrase? You want to have strong opinions loosely held. So, when you see these analyst targets and they're very positive, they might be because analysts are paid to make targets, to make share price targets 1 and 2 years out into the future, because they feed in from databases like Refinitiv, and then you see them present here in Selfwealth. And so if you're investing for 1 or 2 years out into the future, it might be very different to what I'm investing for and what you're investing for, which could be 4, 5, 10, 20, 30 years. And at the end of the day, there is a lot of emotion. There's an emotional side to investing, and those can influence analyst price targets one way or the other. So it's something to keep in mind. I use them as a sense check on what do the other investors think, and then I go from there. Jason, you said, I'd subscribe again, but I get 4 notifications and 3 emails when you go live. Well, yeah. Okay. Well, sorry about that, but at least you're not going to miss it. So B. Caddis just said, analysts were good when the internet didn't exist and you could only obtain stock info from newspapers. Yeah, that's right. So they're basically 3 ways to get an edge. To have better emotional intelligence and behavior than other investors, to analyze better, but computers do that better than all of us now, and to get more information. And in the past, information was often only reserved for analysts, but it's not anymore, thanks to the rules around what companies can and can't say. So thank you on behalf of Rob and I, on behalf of Selfwealth. If you're joining us from overseas, thank you. If you're joining us from WA or even over the sea in Tasmania, thank you for joining us tonight. And thank you everyone else that is like me on the Eastern Seaboard. It's wonderful to sit down and talk investing for an hour. We'll be back next week, next Wednesday. We've got basically one final week of reporting season. So be sure to find us on social media. Send me a message on Twitter or just drop us an email and we will try and get some of the companies that you want to see on the show. So until next week, thank you for tonight. Thanks for sticking with me. We went a bit over time. Very ambitious of me to get through 10 companies. I hope Rob's not too upset. I'm sure he's okay with it. Thank you guys. And we will look at getting someone involved in lithium on the show as well, so we can get some expertise there. Thank you, everyone. Don't forget, Big Swinging Stocks in your podcast player on Spotify now. I'll see you next week. Rob, thank you.